Hey everybody, good morning. Welcome to Stock Trading Pro. My name is Pete Renzulli. We have a lot to cover today. Really, the biggest question that we're going to cover on today's call is whether or not the current 4 to 7 week stock market rally is over and whether or not it's time to protect profits. Is the next pause going to lead to another move higher, or will the next pause lead to a reversal? It's very interesting the way we're lining up. And I thought what would be kind of fun today is we do a deep dive into the way that I am mapping out the entire week, but more importantly, how I'm mapping out I plan to trade for the remainder of 2022. I think everybody knows the buy the rumor, sell the news type of a cliche on Wall Street. It's a cliche because it's the truth. So what we're really going to determine this week is build an argument for whether or not the recent stock market rally and the reasons that the stock market rallied are over, or have we actually just begun and we're looking for new moves higher? Big conversation, obviously, for 2022 has been around inflation. Look, I don't know where your pocketbook is or your wallet right now, but this has been an expensive year to walk out the door. Has that cooled off a little bit? I don't know. Energy prices are coming down, that's for sure. But has it cooled off enough that they are now going to be pricing in lower interest rates hike, which the next interest rate hike is December 14th. Right now, as of this moment, November 28th, is a priced in that we're going to be raising less than the previous announcements, which were 75 basis points. It looks like the odds are strongly pointing towards a 50 basis points rate hike, which is less. And does that mean that now the Fed is saying we've cooled off enough that we think inflation's turning around? Well, again, I don't know about your pocket, but it costs a lot of money even just to walk out the door and get a sandwich right now. So it's pretty interesting. Remember, we are buying the future. We are not buying what happened. That's a really big thing and I think a lot of people mistake that when they're actually looking to buy stocks and when earnings come out. We have the announcement of whatever the number was, and that's what they did in the past. But what a lot of people mistake is that we are buying the guidance. We are buying the future cash flows, not the previous cash flows. And we're actually talking about that at the current price that those cash flows are at. So what does that have to do with right now? Well, what kind of trading are we planning to do for the remainder of the year? It's going to be very hard. And we're actually going to take a quick look at this. And I want to point out where the pockets of opportunity have been, where I personally have been focusing and buying stocks myself the most, and whether or not those areas are going to continue to remain strong, and the reasons whether or not they are going to remain strong. So if you've been an active trader, especially the last, let's say, 3 months in the stock market, industrial stocks, financial stocks, and energy stocks have basically lifted the Dow Jones Industrial Average into this massive move higher with a much, much bigger percentage move than the NASDAQ and especially the S&P 500. So we're going to compare those. We're going to break it down. We're going to do a little bit of a deep dive into sector rotation and then which stocks. And more importantly, this is the big thing for today's video, is how I plan to trade aggressively for the remainder of 2022, what I believe is going to happen in the stock market for the remainder of 2022. And it's more of a strategic conversation we're going to have today as opposed to a very specific stock pick, because it's really going to set you up for looking at and having the right mindset for how to trade. So we got a lot to discuss today. I'm actually pretty excited. So stick around. Be back in just 1 second. Okay, so thank you so much, obviously, everybody, for being here with me today. I really, really appreciate it. What we want to talk about now today is whether or not we are looking at a new rally heading into the end of the year and exactly what that means. Now, that's a really big part of trading right now, is has the moves that we have seen. Now, I just want to throw one stock out there for you and really kind of give you a little bit of context for the rally. And I'm going to talk about GE. Again, I've been talking about GE quite a bit over the last several months, actually. And if you get an idea of what GE has done. So basically, we're looking at when the market bottomed here after the CPI data. We're up over 40% in General Electric over the last 4 weeks. That'll give you an idea of how strong the Dow Jones Industrial Average has been, basically because of where it's been rallying off of those types of stocks. So we're basically looking at the Dow here. Now, what I want you to focus on is right here in this specific moment here, which is the middle of the summer. So you have the Dow there, You have the SPY, right? We're not even close to being up at that level. And then you have obviously the NASDAQ, right? And the NASDAQ is actually going to have a little bit more problems right now going forward as well. So here's the big thing I want to talk about. Have you been involved in the stocks that have been carrying the stronger part of the market higher, or are you continuing to hang on and try and buy technology stocks, which have had a lot of problems other than semiconductor stocks? Semiconductor stocks actually had a pretty decent rally lifted by NVIDIA, which there's a little bit deeper problems underneath the hood for NVIDIA, but we're going to take a look at that today in a second. So basically the point that I want to get across, and really what I'm doing right now is I'm answering kind of questions that we get for new people that come into our boot camp, which is basically, how do I know which stocks to buy at the right time? And it really comes down to, you need to do a little bit of game planning. Now, I want to talk about game planning. And again, when we're talking about the more popular stocks, right? We're talking about the more popular stocks, and we're looking at what NASDAQ has done compared to what the Dow has done in that same period of time. So in the same period of time, we've been watching financial stocks, which also had a very significant rally. You can see where they are compared to that. We've also been watching, as we just said, industrial stocks, and we've also been watching energy stocks. Now, energy stocks are in a little bit of, I'm not going to say pain as much as their crude oil is actually breaking down, which is that whole inflation argument right now. So here's what I want to challenge you. Here's the big thing that I want to put out there, because we have a lot of time left in the year. Now, if you're like me, you spend a lot of time at the end of the year dwelling on what you did right during the year, what you could improve heading into the next year, and then you start to set some big goals going into the new year of 2023. Now, a lot of people do this in January, right? Resolutions and all that kind of stuff. I like to do it a little bit earlier because I want it to be a planning process where I spend a lot of time really thinking about what's holding me back from a higher level of profits in the stock market. What stuff maybe can I do a little bit better? And then you start to reflect a little bit more on what did I do well, and can I do that at an even higher level? There's a higher level for everybody in the markets. So the challenge I want to ask you right now, as we start to break down, and I'm going to break down the entire newsletter today to really show you what it looks like behind the scenes and really what my thought process is now. And beyond a shadow of a doubt, there's not even a question about this. One of the biggest epiphanies, one of the biggest revelations that we have in our community, especially on the coaching calls, is the realization that the market, and particularly ideas to buy or sell short stocks, it's not the same odds. It's not the same conviction. It's not the same size that you should put money into that deal on every single trade. So the challenge then comes for you as a trader is to recognize, when should I be having bigger position size, maybe more position sizes, and when should I be holding longer or when should I be booking profits? That is by far the number one thing. Now, what's exciting about that, but also frustrating at the same time, is you need to recognize it when it's in the moment and not after the fact. If I can give you a little bit of a insight into what I'm planning for both the community as well as for my own personal trading this year, as your community and as the members, people that you're trading with, you start to gain a little bit more maturity. You start to get past candlesticks and bull flags and that kind of stuff. And you really start to focus on, where should we be pushing and trying to make money versus what should we be avoiding because it's kind of stuck in the middle of nowhere. So I just want to bring this up to you because there's pockets of opportunity when you should push it and pockets of opportunity when you should not. Now, right now for myself, heading into the end of the year, I'm going to show you exactly the way I'm thinking about it. I do believe right now, between now and the end of 2022, I do believe that the bullish factors that we had that created this 4-week rally that we've had in the market since these 1, 2, 3 economic data points came out, PPI and CPI, I believe that those factors, as well as anticipating the Fed reducing how much they're raising rates by, I think that those are priced in already right now. So I just want to be clear about this. I do not believe that we are going to have a strong rally into the end of the year. I do believe we'll kind of be trading back and forth. Now, does that mean that we are not going to have opportunity? No. We absolutely are going to have opportunity, but this is where we now get to the difference between chart reading and predicting versus paying attention and creating a strategy. So what I plan to do between now and the end of the year is a lot more hedging and two-sided trading. Now, if you don't understand the short side of the market, it's this, if you're trading options, you can do the same exact thing. You can be buying puts, expecting the market to go down. But here's the visualization that I want to give you. And this is actually kind of fun. I just want to put this in there. And I want to bring up some more reasons why, right? This is really what the trading is all about, right? So reasons why. We all know that this situation in China is not getting better right now. As a matter of fact, it's getting worse. That's going to put a very heavy pressure on supply chains and a lot of the major companies that are out there. We also have this. We also have the crypto winter and the whole FTX debacle and what's going on and that, believe me, that is not done unfolding right now. So we have all of these reasons that the market went up, and now we are looking for new reasons for the market to continue. That's the big thing. Now, obviously, what we do is called order flow stacking. When we look at order flow stacking and read the tape, we're looking to determine how long has buying or selling pressure been in place, because that really means that that's how much real money was spent to create those charts, those beautiful charts that we've been buying over the last 6 to 8 weeks, right? But now we have to be saying to ourselves the second part of that equation. If order flow stacking is obvious and how long has it been obvious, now we're going to get to the point where we're going to say, is it still valid? Now, that's the part that I want to get across here now. Okay, so we're actually going to pull this up and we're going to take a look at the newsletter for today. So we're going to break down the newsletter today and we're going to hop on over here and get into where the market has been. So we love to track what's going on in the market because this is really where conviction comes in. Now, hopefully this is a screaming image for you to understand that there are simply different pockets of opportunity versus opportunity and the likelihood of following through in our direction diminish. Now, here's the thing. I want to be super clear about this. If you are good at reading the tape, if you are good and understand and have a process for saying it's obvious and it's still valid, you're golden, right? You understand when to size up because not only is it obvious, but you also have profit potential. So now heading into the majority of this year, energy has been very strong. And now we just showed you energy and crude oil breaking down. Specifically, drilling is where the money is flowing out of the energy sector. If we go to some of the bigger stocks in the energy sector, such as ExxonMobil and Chevron, we'll take a look at those charts and break those down. They are in what we might call a PCOT. So you can see the multi-week pause here, which we're also seeing over here, right? So if we break this down just a little bit more, you can see that over here. So what does that mean? So what we are looking to establish right now is if we choose to accept risk, is the likelihood of earning the right amount of money on that trade in our favor. So right now, with the energy group pulling back a little bit, I'm not going to be looking to be buying new breakouts there as much as I was probably about 2 weeks ago. And the other group, which was financials, which carried that group much higher. Now we have their margins expand as interest rates go up. Now we're talking about cutting those interest rates, or I should not cutting. I want to be super clear about that. We're not cutting interest rates. We are cutting the amount of the raises that we've had. So 75 basis points, widely expected it's going to be 50 now. So the reason earnings and the interest rates expanded the margins on the financials, that's going to be coming down a little bit now. So again, we're buying the future. If the future is now discounting the fact that interest rates are not going to be as aggressively raised, that's going to cut into the expanded profits in financials. The other part that raised the Dow Jones Industrial Average was industrial. So again, if we go over to the Dow and we take a look at where the Dow is and what the Dow did compared to the other groups, we know that the Dow has been very strong, and we know industrial stocks have been a part of that. So if we take a look at some of the bigger industrial stocks, such as Boeing, such as Caterpillar, we've also just talked about General Electric. Pretty big moves, right? But again, we know that there was news that made them rally up to this point. We are in need of a fresh catalyst. So I want to keep walking you through. This is all the thinking that I'm doing right now between now and the end of 2022. I saw somebody ask me there about long-term. Long-term to me right now is week to week. There are so many macro things that are going out in the world right now. And you also have to ask yourself, if you bought based on the recent earnings season that happened and your stocks, such as, let's say, TJ Maxx, for example, had massive rally the way it did. So let's actually talk about some of these ideas. So you got TJ Maxx and some of these other stocks. Are they now at a price where it makes sense to get long again for long term? So right now, I want to be super clear about this, Franz. Right now, for me, long term, I am talking about week to week. And I know that sounds crazy for those of you that are investing, but we are right now, we're going to have other investing segments. But right now, we're talking about between now and the end of 2022. So the title of today's video, protect profits or look for new ideas. Should we be buying stocks right now? I am absolutely going to be looking for two-sided trades right now. So that means that we are going to be watching like a hawk, relative strength and relative weakness. So I want to walk you through now how that is going to end up unfolding for me into the end of the year here. Okay. So hopefully you can read this. I'm actually going to zoom this in a little bit. So what I want to get across here very, very clearly. Okay. If you are just waking up every day and saying, I just want to buy stock, I just want to buy stock, you're not putting enough effort into whether or not it's a good time to buy stock and whether or not follow through is likely. Now, look, I think all of us much prefer to be just in there buying stocks, hoping the market goes up every day, all day, and just making things easier. It's just easier to be looking to be a spot to buy. But we're now at the point where we have to be saying to ourselves, what is the likelihood of the massive stocks continuing to rally after the market pretty much got the economic data that it wanted, which caused now the Fed to say the odds are likely on December 14th, we're not going to raise. So I want to keep walking you through this. So what I'd really like you to do is take screenshots of this as I'm going forward, because I want to challenge you between now and the end of the year to really build out reasons for which stocks you would plan to buy and which ones you might consider using as a hedge, where you'd be short selling those stocks, expecting them to go down versus the stocks that we're looking to rally. And I think right now there's a big difference on the retail side of things, where retail stocks obviously are still strong. Walmart actually hasn't stopped going down since earnings, but I want to keep breaking this down for you, but just to throw Walmart in there, just to give you an idea. So we got TJ Maxx and Walmart, right? Pretty darn good, right? So let's keep going through what we're looking at. Stock market is basically in a 2-week pause. We're looking for a new catalyst here, right? The only significant rally comes on the back of the PPI data on November 10th. The SPY continues hovering near the 410 level. Now, I'm breaking it down a little bit more. Why has the stock market rallied during that period, and is it still valid? That's the challenge that we're having. Now, you heard me mention PCOT before, which means potential change of trend. I just want to say this very clearly. We'll pull up that chart of the ExxonMobil again and Chevron. Potential change of trend is where money goes to die. When you continue to try and trade a stock that's really not going anywhere, you are now putting your money in harm's way, where the likelihood of earning sufficient profit on that trade has diminished. And you're basically, if you're not losing money, you're actually putting your money in a place where there's nothing to do. So I just want to give you a visual of what that looks like. So remember, potential change of trend. That's the big thing that we're looking at right here. So if we take a look at Exxon again, you can see it really hasn't moved in a couple of weeks. And you can actually get a much better visual of that right here, right? If we go to energy across the board, it's really the only one that is not red or green across the board. So it really hasn't done anything for 5 weeks, okay? So we're going to keep moving along. Economic data has the FOMC odds of raising by a lowered rate of 50. Again, they're not decreasing, they're just raising by a smaller amount. Next meeting is on the 14th, which roughly 2 months to the current rally has began. CPI published data. So that basically, what am I saying here? What I'm looking to do right now is I'm looking to build arguments in my mind and for myself in my trading plan to determine whether or not being a buyer is the smart move, where being a buyer is the smart move. Now, let's put this in context here. There are certain stocks right now that I just showed you: General Electric, Walmart, TJ Maxx, Gap Store, like a whole bunch of stocks in that group right now. We're not determining whether or not they're bullish. Right now, we're determining whether or not the odds of them following through to take risk is still on the table. So basically what we're saying in the energy group right now, what I believe going forward, the energy group is not going to be rallying. I don't believe financials are going to be rallying, which means now we are shifting over into a different area. So that means we're looking now from the big picture to the sector, now into individual groups. So we're shifting over into retail and consumer defensive. Okay, so I'm going to keep going through here. Remember, this is literally what I am planning out for the remainder of the year. So I want to kind of give you how much thought actually goes into it. All right. All right, so now going down. So the question for us to ponder is this: is the December FOMC news already priced in? And also, what needs to happen for the stock market to continue the recent bullish rally? So we're all friends here, right? We're talking on YouTube. What would need to happen right now? Do me a favor, type it into the chat. What would need to happen for us to believe that the recent 10-week rally in the stock market is going to continue in a way that gives us much, much better than a 1-to-1 risk reward? Obviously, we'd love to see 3-to-1. So at the current levels that we're at, with what's going on in China right now, with what's going on in Bitcoin right now, what's going on where they're still raising rates. And I don't know about you. Again, you can't go out and get a sandwich without being $40 for 2 people to have lunch. Inflation is not cooled off right now. Okay. Cyber Friday or whatever, Black Friday, it looks like it was good for online retailers, but Amazon's still in the dumps right now. That hasn't turned around either. So what am I saying right now? I am asking myself before I place my next trade, what are the odds of a continued rally? And these are the things you have to be asking yourself. Now, I know, look, we're on YouTube, right? We can't wait to place trades. We're all talking about stocks right here, stock market all day, every day, right? We have to be smart with our money. We just had an amazing 10-week rally. Mostly, like I said, industrials, financials, basic materials are starting to perk up a little bit, energy cooling off a little bit. Sometimes we need to protect those profits, and sometimes it's okay for us to be buying. The way I'm looking at the market right now, we're moving up the stock market power pyramid because what I believe carried the Dow for the most of this year, quite honestly, has now diminished, and we're going to be looking at other groups. And that's actually what we're going to be talking about right now. Okay. So what needs to happen for the stock market to continue the recent bullish rally? Has inflation cooled off? Well, technically, yes. Are we feeling that in our pockets? No, absolutely not. Silver lining, energy prices and the price of crude continues lower as it recently broke 76. We actually showed you that over there, right? So we take a look at that. So crude prices actually coming down. We just broke big support. That's actually kind of awesome, right? That's good news. But let's keep going. Technology, specifically semiconductor stocks, rallied hard for 4 weeks. Do we believe tech is going to lift the markets higher? No, absolutely not. I do not believe that. Will financials do the hard work? Well, they rallied as interest rates rallied. We just discussed the odds of interest rate hikes slowing, right? So rally, not going to continue that, right? Sounds like nothing to do. Absolutely not. So now what I'm doing is now I'm projecting out how I plan to trade based on that argument. So essentially the argument that I just made in my personal game planning and my journaling for the rest of the year, I am not looking for the broader picture to be rallying, but now I know that there's plenty of opportunity, as we just broke down, in individual sectors and individual groups. Again, if you haven't been trading or watching the solar stocks, a lot of them are at breakout levels right now as well. I'll just show you 2 of those pretty quickly right now, just to give you an idea. So ENPH, if your account size can handle a $300 stock, continuing to rest near a breakout level, and FSLR and run. So obviously we're not looking to jump into right now. It's pre-market, but those are the groups that have been a little bit stronger. So let's continue to break down what we're looking to do right now, right? So here, this is really the meat and potatoes, right? This is really what we're looking at right now. And I'm going to highlight this because this is what's important. All of that argument, right? All of those ideas basically means I'm planning for two-sided trading, hedging, and weekly sector rotation until the SPY gets some separation from 400. So essentially what we're looking for right now is the SPY has kind of been stuck between 390 and 400. This is fantastic that we broke out. Last week was a little bit tough to read the tape because it was a short week, right? Not much going on Wednesday, Friday, half a day. So what we're looking now is we need to get away from 400. The further we get towards 400, we're going to look at this 417, 418 level will be the next move, because this is actually where the downtrend of 2022 is still maintaining that selling pressure. All right, so let's keep going forward, right? So I already know that I need to get away from 400. Unless we don't get away from 400, there's really not much aggressiveness to do from the S&P 500 perspective. It also means you need to put a few extra minutes each night into your plan, right? If you don't, you won't have conviction. Now, this is probably one of the biggest things that a lot of people get confused about is, why did I get out of good trades too soon? Why am I hesitating? Why am I not just hitting that buy button when I see the trade? Why am I hesitating? I'm telling you right now, it's because you didn't do that little bit extra 5 minutes, 10 minutes worth of work to say, do I really want to be buying this stock right now? Do I really want to be getting out of this stock right now? Or should I be holding it because of X reason, Y reason, Z reason? Don't touch that dial. Let that profitable trade move. A lot of people believe that it's the ability to predict the market that gives you conviction. That's BS. That is absolutely not the case. Having the strategy and then doing a little bit of extra game planning to find stocks that meet your strategy, that's where conviction comes from. It's when you just wake up and you're like, I'm just going to be a buyer today because the market's open and I have money burning a hole in my pocket. That's not a good enough reason. If you come up with one reason, two reasons, three reasons, four reasons, cool. So what we've actually done now is we've come up with reasons why the likelihood of following through higher has diminished, in my opinion, and how I plan to trade it. Okay. All right. So from a relative strength angle, the Dow Jones is where it's at. Industrials, energies, and financials produced a strong bid. Some better sector and industry specific ideas here for the bulls. But now we're going to break this down a little bit deeper into sector rotation. Reading the tape can be tougher on holiday weeks. We need to ponder the question of whether the market has slowed down or if we simply didn't see any new commitments over a longer weekend. So what does that mean? Especially if you are a day trader right now? We just made the argument that the market is kind of still stuck at that window. A lot of the stocks that push the market higher kind of still pausing over there as well. What does that mean for your level of aggression today, specifically if you happen to be day trading stocks? I'm going to be tiptoeing in, quite honestly. I'm going to be really leaning on the market internals, advanced decline, new highs, new lows. The other market internals that we look at during the day, I'm going to be looking at sector rotation on a much shorter time frame basis. I don't personally right now have a data coming off of a holiday weekend into today with this new news from China on this big move to the downside. So it's going to be a very interesting open today. So I plan to trade today and specifically day trade and maybe initiate some new positions that I plan to hold for the week. But again, remember how I said just a couple of minutes ago, understanding when to trade bigger is a big part of how you get paid. Well, also understanding when you should not be trading bigger yet and actually trading smaller is a big part of trading as well and long-term success. So heading into this week, I want more data. I want more feedback to either validate the idea that we just mapped out or disprove it. So because I believe the market's slowing down and all of the reasons that we have rallied, I now want some more feedback from the market today to tell me how I should trade. So that means, again, I'm giving you really behind the scenes trading stuff right now. I am not trading aggressive position size on Monday until the day unfolds and how it closes. So now I'm telling you position sizing of what I'm looking to do. Okay. So let's break this down a little bit deeper. Okay. The last 4 weeks look good from a bullish tone. So we have stacked order flow, but we need new reasons to sustain the move. Remember, we're looking going forward. Earnings season is nearly over, so we're not getting a lift there, right? The majority of stocks that would move the market. Energy headlines and the price of crude are bearish. We talked about that breaking down. Industrials are up nearly 23% in 30 days. That's a big move for that group in case you don't normally trade those. Without a meaningful decline or a pause, easily the strongest rally. And as we just talked about, GE is up over 40% in 30 days. Financials come in second. Real estate and basic materials held the bid last week. So again, what am I doing here? When I'm mentioning this and I'm starting to work my way over now I'm working away from the ones that I believe are going to pause, if not pull back a little bit. But now we're talking about real estate and basic materials, possibly taking the mantle, the bullish mantle, heading into this week, specifically precious metals, silver, and copper. So you want to take a look at some of those stocks, okay? All right, so we're going to continue our way down. As far as profit potential, basic materials offer the best chance to see some new gains. So now I'm looking at and pushing out a little bit further into the end of the year. So now we're going down a little bit deeper into industry groups. Retail and apparel put a nice show for the earnings season. Not shocking heading into the holidays. Not shocking, right? Oh, not a shock. Okay. All right. So let's take advantage of it while the bid is still there. We have Abercrombie and Fitch, American Ross Store, Gap, TJ Maxx, Macy's, and Walmart have not paused since reporting. So if we go through those stocks, we now know that retail stocks are worth our attention right now because they're holding the bid while the market's going sideways. Energy stocks still technically in an uptrend, but they're clearly in a potential change of trend, but some weaker than other stocks. Internet retailers are also pulling up the bottom. So now we're looking at Wayfair, and we are also looking at Amazon. So I just want to map this out for you so it's super, super clear. I am looking for the bid or buying pressure to maintain itself throughout the remainder of 2022 in retail stocks, which is that big list that I just gave you. I am looking for internet retailers, which are not seeing a bid right now, specifically Amazon and Wayfair, to see selling pressure into the end of the year. So now, as I talked about before, I'm looking for two-sided trading. I'm mapping out the side of the market that I am looking to be a buyer of and the side of the market that I'm looking to hedge or short sell against those ideas on the long side. I believe that we have come close to seeing the market top out for 2022, but this is the key, but there will still be plenty of sector-specific ideas. So if you know the stock market power pyramid that we look at, and I just want to pull this up to really give you a visual. Right now we're talking about is I believe that the market itself in the big picture is going to slow down here, but we're going to be moving up to sector and industry specific ideas to find profitable trades between now and the end of the year. Now, is that a lot? Well, how much money do you want to make, right? If you want to make a lot, you got to do a little bit extra, right? Or if you want to make a lot, you got to do a lot extra, right? It's not the market right now. We could just wake up and say everything's going up. I want to be a buyer. I think that we had that. We had three different pieces of economic data that the market rallied. That economic data caused the Fed now where the odds are the Fed is not going to raise as aggressively. So they kind of got what they wanted. But what we're talking about now at the end of November of 2022 and what we believe is going to happen between now and the end of the year. So specifically the next 5 weeks of 2022, the last 5 weeks of 2022, I think the market itself is going to probably go back and forth a little bit, but stay tuned to this channel, watch these live streams because we're going to do the breakdown that I just gave you where it's going to be very sector specific. I do believe energy has cooled off a little, but I believe that the drillers are going to pull the rest of the group down, especially with the way crude oil broke down. It would be very hard, even though a lot of those stocks had record profits this earnings season. Remember, we're buying future cash flows, not cash flows in the other direction. So it's going to be really interesting to see if there's going to be short sale opportunities in the energy sector. Not quite in the financials. They're still too strong. They haven't pulled back a little bit. Remember, we're talking about the two sides of the trade. Is it obvious and is it valid? The answer on the financials to both of those is yes. The question on the financials right now is, are we near an optimal entry that justifies buying those stocks because we believe the profit potential is there? And right now, the profit potential on a new buying opportunity in financials has diminished a little bit. So we need a little bit of a pause or a pullback to expand the profit potential on the financial stocks. The one financial stock that I do want to point out right now that was a little bit of a laggard that is near a breakout level that I want to point out to you right now. I'm going to just show you this one because it's actually on my radar this week. And it's actually this stock right here. You can see that it has actually plenty of profit potential up toward this 105, 106 level. And we're kind of hovering right around this 92 level. So I need Morgan Stanley to get above 92 before I start to take a look at it again. But this one has the most profit potential because it's actually right at or near a new breakout level, as opposed to a lot of these other ones, which have pretty solid momentum, but they're beyond the optimal entry. So Morgan Stanley is one in that group that I'm going to be keeping an eye on. Whew, is that a lot? Well, you know what? We got a lot going on right now. We got inflation, we got China, we got crypto, and we have the Fed coming up. So if that doesn't tell you, just rattle off 4 significant things that are going on in the market right now. If that doesn't tell you that you just need to put an extra 5 minutes, an extra 10 minutes, an extra 15 minutes into it before you choose to buy new stocks, gosh, I hope that I convinced you at least that you need to do just a little bit extra, and that I believe that the straight up kind of market conditions are kind of have played themselves out right now. The reason we rallied happened. Now we need a new reason to expect a big rally into the end of the year. So keep coming back to the channel. I promise you I'm going to keep giving you new ideas like this. Sector rotation is going to be the top of the list. But again, I'm going to be looking for buying and short selling right now between now and the end of the year. Okay? Have an awesome day, everybody. I'll speak to you soon. Thank you so much for joining me today. It's going to be fun to see how the rest of the year unfolds. And keep coming back because I'm going to have more rotation like we discussed today. I think it's going to be the better play between now and the end of 2022. Have a great day, everybody.